We are live.
Yes.
No one's watching us.
No.
Let me.
I can't see viewer count, but it's fine.
Okay. I will copy and I will place it in the collaborations tab.
Oh wait, YouTube right now, because I have a separate tab open, shows that there's 6 people watching right now. So we got that going.
Did you see my thumbnail?
Yes, I thought it was beautiful.
I'm probably gonna I have to add more to it. We'll add Meet Kevin. We'll add a few more people onto it. That picture cracked me up. Let me pull it up. So before people get it. Like, what a friggin' photo this is. Like, did you think that would, like, a year or two ago, if I'd said to you, hey, there's going to be a photo of Trump on a stage that someone tried to kill him, and he's going to go back to the stage where someone tried to assassinate him, and on top of that, Elon Musk is going to join him and jump in the air for an awkward photo. If I told you a year ago that was going to happen,
I would not have had that on my bingo card.
this is like, there's so much to unpack with this photo. I just think it's funny. So I guess he's dark MAGA.
I
Elon?
guess I don't know.
what dark MAGA. What's that mean?
Yeah, I don't know what that means either. But this is the timeline we live in.
I haven't made my mind up yet who I'm going to vote for. I'm still up in the air about it. I guess we'll see when I go, but you always vote. So, okay. Anyways, let's go. It's funny. I noted the view, since football season started, it's hard to get at night. The viewership is not there like it was during the off season, which I've noticed. Before football started, you could draw I could draw 50, 60 people. Now it's down to maybe 20-ish some nights. But I don't blame people. I'm watching the NFL. I love football. That's why I haven't done much videos lately, because love the gambling. Because it's so cool because you can watch a football game, and then you can have FanDuel out while you're watching the game, and then you can bet on each drive. I don't do that stuff, but you can bet on the drive. But then, more importantly, you can keep betting on whatever the game. All the props that started the game, they adjust as the game continues. So it makes football so much more even more interesting, actually. So it's such cool technology that they can do that. And they can beat, and you might try and say, okay, I've got an arbitrage, right? You'll input a bet. Let's say there's a third down and we're in the middle of the fourth quarter, and one team, if they don't get this first down, it's kind of over, right? Mm-hmm. You think I'm gonna have the bet ready and I'm gonna hit it as soon as they miss or whatever. You're not gonna get there because they get the feed before you. So because you get the delay, your feed is 30 seconds behind live television.
Oh yeah, so
they're getting probably the real feed right from the networks, not the delayed one that you get. So you can see if a team's about to score, you'll watch all of a sudden it'll just lock the bets, and then you'll watch, and sure enough they score, right? So you can almost know what's going to happen before it happens, but you can't bet on it. They're really good at blocking that stuff because it's just like the stock market. Someone would exploit any sort of flaw in their system. So they have, it's the same as so gambling and stock market ain't that much different. People are always looking for a little, advantage. And then, you use it until they close the door on you, or you sell a course to tell people how to do it, which is apparently what people love to do.
Yeah, the good old arbitrage, it exists in the academic textbook, and it does exist in real life for a period until, like you said, gets efficiencyed away or caught on.
So I didn't do a video on this. I know I should have, but I've been tired.
That's fine. What on
all freaking fall girl sport, kid sports in the fall are brutal. I will tell you that. Okay. Stop screen, present. I'm going to miss this about StreamYard if I use something else. It is very easy to use. I will give it that. So what was funny about Paul, he's like, I'm buying Shada.
Some exciting news. I'm going to be putting about 25% of my net worth into SCHD. Now, you may recall, if you've been watching our channel, we have a past video that we
You can hear that, right?
Yeah. Oh, yeah.
did talking about SCHD. Recently, I decided to change the way in which I'm handling my money. I've got a lot of
So he shit on dividend investors for years. I mean, you know, like anybody that's watched his channel, like the last like 2-3 years, he's just dumped on dividend investors constantly. Oh, you shouldn't invest for dividends. You know, that's the last thing a company should do with their money. And just constantly just dunking on dividends, right? And it's like now all of a sudden he's our friend. Like he's the friend of the dividend community all of a sudden, and he's our boy. It's like this is like disgusting. Like such a play on getting views from dividend investors. Like I'm assuming it's because he's failed so spectacularly as a whatever fake boglehead or fake value investor. Like I don't know, he's lost $10 million shorting Nvidia, and he's like, I'm gonna put all my money in SCHD, even though I did a video 2 years ago making fun of SCHD and saying it was a bad investment. But I've changed myself. And then we found out he says he was gonna put 25%, and then he did a video like a day or two ago, and he still hasn't. He's like, I hope to put 25% into it. And then he did some other ludicrous video about QQQ, whereas like you dollar cost average in SPY, but you buy QQQ when it's cheaper, right? So for some reason he thinks you can time QQQ, but SPY you can't time. You just buy it. But I just think this is so funny what he's
FANG is really popular. So I thought to myself,
where you go.
All right,
but
see. In most cases, they're not the best use of the company's cash. It is a double taxation. The company's taking their profit, pay tax on it, then they pay out that profit, you get taxed again. Also,
that's not a con for the business. So I found that odd. Because you're saying pros and cons. Okay, pros and cons of SCHD, like or of the business paying dividends he's talking about. Yeah. It's not a con of the business paying a dividend that you pay a tax afterwards. Like that's your problem. Mm-hmm. So double taxation is a problem of the investor, not the dividend, not the company. So his whole thought process is just idiotic about this. And you know it's funny. So remember, I did a video when people were saying, well, dividends, you should do anything other than pay a dividend, like a company. That's what I would hear from people. They're like, anything's better than paying a dividend, right? And they would be like, you know, reinvest in the company or buy shares back or acquisitions, anything, because it's just pissing money away. Well, you remember I did a video about Pfizer, what they did with their COVID war chest, that they bought a drug company that sold a sickle cell drug. Mm-hmm. And it was really weird because the sickle cell drug, like the total market, addressable market of that drug was like smaller than the purchase price of the fucking company they paid for it. It was ridiculous. So they spent like, it was like 7 or 8 billion to buy the company with a addressable market of this illness of like 5 billion or something, if I remember. So anyways, they pulled the drug off the market now. So again, it's like, here's another example. Whoops. Okay. So but these people always said, oh, you know, last resort should be paid dividend. Okay. Was it better for you, investor, when Pfizer bought a drug extremely overpriced and then they pull it from the market because they could have used that money to pay a dividend? Right? Oh, yeah. So they failed investors. So like this whole logic, I hate this. Like the dividend, I'll say again, like the dividend payment is like a threshold I like with companies that I invest in. They have to convince me, or they have to tell, you know, there's a dividend in place. If you have a new investment, they have to decide, is this worth the money more than just increasing the dividend payment? Mm-hmm. So like Pfizer, should they have raised? We know the answer now because the drug failed and they pulled it from the market. Because back then, you know, they could have probably given like a 20-30% raise in the dividend payment rather than buy that company, right? So that there's a threshold to this stuff. And that's why I always appreciate with companies, like, do you give the money back to shareholders or do you have a better use for it? Defend yourself. Whereas if you have no dividend, you don't have to defend yourself. So
also,
let's see more
if
wisdom.
the company has a lot of growth potential, love
I'm gonna go
dividends.
forward.
And SCHD focuses on companies, and that's what I love. Now remember, you have to be okay trailing the market for a portion of your money, because your goal here, and my goal in this, is to generate cash to live off of. It's not.
We're going to get back to that point. So his goal is not to outperform the market, that his goal is to return cash to himself by buying SCHD. Okay, well, we'll put that in our pocket.
Yeah. Yeah.
Hold on.
To become a billionaire. To sit there and say, I'm setting aside 25% of my net worth. I'm letting my real estate grow. I'm letting my businesses grow. And I'm just going to focus on living off this money. Now, as I get distributions from my company, et cetera, because we have excess cash, I can put that in this account and start growing that income even more. And that
here's what I didn't understand. Like, if you're cash flowing all these apartments, like, and you have this real estate empire, he likes to pretend, why are you paying more taxes for more dividends than you need to? Like, why are you voluntarily paying more taxes when you're at Paul's level? If he is as rich as he says he is, he's in all the maximum tax brackets, which means investing in things that give you dividends actually is a terrible idea for someone in his tax bracket. It's the most tax inefficient way to invest. It makes no sense. And if he's cash flowing all this profit from his apartments, why do you need more cash flow on top of it to pay more taxes? Like, he has he has the thought process of someone that's not rich. Like, he's like, you can tell he didn't earn this money. It's his parents, it's his dad's money, right? He doesn't care, because I heard someone say rich people don't care about taxes or and don't care about credit card points. I'm like, are you kidding me? They scrutinize tax liability. Like, they think about it, right? They go to like their tax accountants to try and hide shit from the government and go on, like, they do like sketchy things that are like semi-illegal. There's so many documentaries about people where the big four tax firms they would call people, like business owners, and tell them about these schemes to avoid taxes. And they would describe it like, oh yeah, we're going to create this company and then we're going to do this treatment of your money. And when we wash it, it's going to come back to you and it's no taxes. Like, and these people just go, okay, sounds good. It's like that's how far millionaire like these people will go to avoid taxes. And Paul's like, yeah, it's fine. I don't care. But, all right.
It'll be a good way for me to sit there and say, how do I make this 25% last forever? So my other great tax efficient way by taking the dividends and putting it in a 401k or an IRA. Or if you're already retired or going to retire soon, this may be a good way for you to think about it.
I don't hate SCHD. I just don't own it right now. But yeah, I think it's fine for people. I did a video on it. I don't think it's a core holding for people. It's not diversified enough for a core holding. But I mean, it's funny because like he dumped on it last year when it was a good opportunity to buy it, when all the AI and data center, stocks were ripping. Nobody was buying dividends, right? And now they've come back. We've flipped, which is always happens. So, and now he wants to buy it now when it's like peaking, when he was dumping on it last year when it was at lower prices. So how convenient. You want to buy it now that it's run a bit. But last year was a piece of shit and you never wanted anything to do with it. But hilarious.
Beat the market. They get upset when they trail the market. Me personally, it doesn't bother me. If I own,
it doesn't bother you because you never beat the market, so you don't even know what that means. Anyways, he's never beat the market. I got to do the third portfolio review because the first two, he's never beat the market any time frame of any of the portfolios he's revealed. He's always lagged. So
HD was because I used conservative about every.
Okay, I can't listen to him. Well, I'm gonna go pull something up. I showed it on Strongman's. Can I pull it up? Hold on.
Oh man. Yeah. I didn't watch it. I did see a good chunk of the live stream that you were on with Strongman, and oh boy, yeah, the stupidity is just even worse with Paul.
All right, let me present share.
While you're doing that, viewing public, please do consider liking, commenting, subscribing, etc.
Okay. I know this is like, okay, let me go on deep. Okay. So Paul just wants revenue. He just wants income. He said it in that video, right?
Mhm.
So, okay, fine. Who doesn't want income, right? Okay. But there's investments and there's tax consequences of investments. So I know this. So apparently Paul has people around him supposedly, but I don't know if that's true. So let's take an example. Let's say I did this in Strongman's, but I don't think you could see it because I just
Mhm.
took a picture of it. Let's say he has $20 million. And let's say he said 25% of it was going to go into SCHD. Okay. So 5 million. So if I actually run the numbers with tax consequences, okay, $5 million of SCHD. The yields I post here were from I think a week ago. These are like the week ago yield. So generates $181,000 of qualified dividends. Oh, great, qualified dividends, and they are SCHD is like it should be like 99% qualified dividends, long term. Good. So it is for a non-tax or for just for a regular brokerage. That's not bad. Which is what it was designed for. That's why they exclude REITs, and I cover this in my review of it. They exclude REITs and things that are taxed higher intentionally. So if we look here, okay, what's the tax consequences of Paul buying Shada? He will get, let's assume he's in the highest of every tax bracket, he's the highest, right? Assume he is for rich. He's going to pay a additional tax to the federal government of 3.8%. So this is modified taxes, right? For rich people that have, I think it's over $200,000 a year of income investment income. So he's going to get that. Okay, so there's a tax there. He's going to get federally taxed at the highest rate, which for him, his long-term cap gains would be the 20, not 15%. Okay, so better than the income rate, but still 20%. And I looked at Ohio because he lives in Ohio. Ohio does not have a long-term cap rate. Ohio, it's all income. It's just income. So he gets taxed the highest income tax rate of Ohio, 3.5%. So his total take home of that 181 is 131. Okay, I'll speed this up. But now let's say he did a T-bill. Okay, which I've never bought a T-bill, so some of this was interesting. I talked to Strongman about this. I didn't realize T-bills are a terrible idea for rich people. I thought that's where they would hide stuff, but no. So T-bill, you'd get a little more, 198,000, because I assumed like a 10-year T-bill rate. Because okay, it's just for an example. So you get, again, you got the 3.8% rich person tax. Then you get the 37% federal tax because T-bills are income, right? There is no long-term cap gain, but no state, no local. But his take home, it sucks. Okay, so in this example, SCHD is better. Your take home is 131. Now we're down to 117. Not as good. So now let's go to, okay, Paul's an idiot. That's all I'm gonna say before I get in this, because I know maybe Paul doesn't know this. If you buy muni bond funds, you don't pay any taxes in your state. This doesn't now. Does this matter in all 50 states? No, this matters in very specific states where tax consequences matter more. Like my state, Ohio, and California, muni bond funds really matter, and I think maybe Pennsylvania too. So in this example, he would get 148,000 of muni bond and income, no taxes. He takes home the most. So there you go.
Yeah. Also, the risk profile is something to stress.
And good point. Because I was going to bring that. So you've got minimal risk and risk profile, right? Risk to return.
Yep.
You're getting the most actually in your pocket by buying the muni bond fund. Minimal risk, because we know there is a chance that some of those municipal bonds could fail because it's a basket of like town and county and sheriff's department and fire district bonds in Ohio. So there's minimal risk. Some of them could fail. The T-bills, we'll say there's zero risk, right? And then you have moderate to potentially higher risk with SCHD because it's equities. And it could take a 30% nosedive. So you are taking less money home with more risk. I don't understand his thought process. Why would you not dump all your excess cash from your properties into an Ohio muni bond fund, which Vanguard does sell one with a very low expense ratio? So Paul is again, not only is he the worst, he's the worst investor on YouTube. Him and me, Kevin, probably side by side. But like Paul's the worst investor on YouTube, and he's also like the dumbest rich person on YouTube, I think, because he like voluntarily pays more taxes, for no gain to himself. I don't understand. Like this man is like something else. So that's my spiel. There's my accounting nerd out. But I think he said in his video, like he talked to his intern about buying SCHD. Like, why don't you talk to your tax lawyer about making these stupid decisions? Because if you're in the highest tax bracket, you know, his tax consequences really matter. If we did the math for this for you, you know, your SCHD tax rate would be like half of that. And plus what state, I don't know what state, you know, depending on the state you live in, like this stuff all matters. And he's like such a dumbass. I don't understand. This is how you know, like it's daddy's money and he didn't actually earn this money. Because like, you know, what does he care? This isn't his money, you know, his brother's managed or running it. So there's Paul for you. He just randomly picks funds and then he tells you that SCHD or SP500 is overvalued constantly. Of course he does. Let me see comments. Oh, wow.
Yeah.
With the amount of money this dude lost on Nvidia, he could have put SCHD and walked.
That would have been the better choice, relatively speaking.
He really did lose.
Yeah.
He lost like $9-10 million at least.
Yes.
When we charted it with Jesse.
Mm-hmm.
It was unbelievable. He'll never recover from that. It's free money. My daddy, like I can tell, like he didn't earn. Like if you earned this $100 million, you know damn well you'd care about taxes, right? You definitely would. You wouldn't just do what Paul's doing, just being like, oh, I'll just dump in an SCHD because I want to live the dibs life. Like, okay. I keep it as a satellite. It's a nice bump to see every quarter. Yeah, I mean, I'm going to interview SCHD Stan at some point. I've talked to him about it. So, you know what? I mean, people can shit on the strategy and hate the fun and stuff like that. But if it excites you to buy it and it excites you to see that quarterly dividend go up and up and up, and it keeps you motivated to buy it more, I mean, you're better off than lots of people out there. You're better than Mr. Portman. I mean, there's like success means growing your portfolio and, you know, getting a retirement in one piece, not losing huge amounts of money. Like SCHD, you could do a lot worse investing. And I love dividends. Look, I am a dividend to the core guy. I mean, this is my weapon of choice, but I mean, I've had a great year. I started buying this like 2 years ago. So if I don't have a better dividend idea, I just buy this. So I was at 30% in a year. So I'm very happy. And if someone, it's not beating the SP500. It's like, that's not the point of this. I can buy this with my eyes closed. I know I'm going to be all right. And I get a dividend every month and it keeps me interested. So it's all you can do. Retiring dividends. Oh, okay. How does this channel have 200K subs if it sounds common enough? Yeah, pretty much. I think a lot of it's just, if you have good production value, people will just think you're good at investing because your video, like he has like an expensive studio. Then he has the screen where he can, you know, do the teleprompting stuff. Oh, God. Let's see.
Good old Big Parma.
Dan is so disgusted in Paul. I love it. Paul disgusts me more than anyone. He's so dumb. I really think he's just a write-off for his brother and his dad's business. Like, I think Paul's just the write-off. They just let him lose money in everything he does, and they're just okay with it because they're doing well, and they just write off like all the shit he loses. I'm pretty sure at this point. Dan is like how his brother still loves him after the Nvidia short. Oh my God. I couldn't imagine if that happened with my brother and I. man, I don't even know. Obviously, I don't invest with my brother. Although we did, we looked at a bar once. We thought about it. There was a
Ah.
bar for sale at a
Mhm.
lake in a lake town,
Mhm.
and we looked at it. We didn't have to buy the building. It was a lease buyout.
Mm.
So it would have been we took the lease over, and then it was like a rent to own agreement where it would become ours. I forgot, like 10 or 20 years.
Oh,
I
okay.
don't know. I couldn't commit to the time to do it, but
Yeah,
it
that would
was an
be a lot of time.
interesting idea.
Yeah.
Huge YouTube revenue returns. Kevin and Paul technically outperforming us all. There you go. What more do you need? It's actually a great strategy. Here is 10% of the family wealth if you can see if you can lose it all. And then we write it off on the profitable business. Oh, you gotta love it.
Yeah,
Okay.
some people want to compound returns. That man likes to compound losses.
And we might as well get into this now. So
Alrighty.
the overvalued everyone's so concerned about is the market overvalued
Yeah.
because it's at all-time highs. So as soon as the S&P 500 got to all-time highs, all of a sudden everyone on YouTube's got to be like, and I saw it on Reddit, is the market overvalued? And then you see people like, what should I do with my money? I don't want to put it in the markets. I'm worried it's overvalued. It's overpriced, all this bullshit. No matter how many times anybody, since the dawn of time, everyone's like DCA into the markets. Don't worry about the price. Time in the market is better than time out of the market. Every study has shown you dumping your money in as fast as you can is better than any other strategy. Every purchase, and somebody saw online, it was a perfect quote. They're like, when the S&P 500 hit all-time highs like last week or something, he's like, every purchase you've ever made of the S&P 500 has been right. If you think about it, right?
Mhm. Yeah.
Every purchase of your entire life of buying the S&P 500, you were right and you made money on it.
Yeah.
It didn't matter if you bought it the worst time of the year you bought it or the best time. It didn't matter. Every decision was right. So these people that are fretting over, is it the right time to buy the SP 500? It's like, yes. I can go like this and tell you yes. I don't even have to look at what the market's at. It's like, yes, it is. Just go buy it. Like, if you're not going to sell for 30 years, what do you care? How many more studies do we have to show people? Like, holy shit. And then this was an interesting tweet from this account I follow, Daily Chart Book. So he had a good point. He's like, do investors realize how high quality the S&P index has become? The S&P 500 companies possess outstanding unit growth prospects, extremely healthy financial strength, and very ample liquidity. Why is that? Because what's changed in the last like year or so in the S&P 500? What do you think? If you look at this, I can't zoom in.
Yeah.
So you got total debt as a percentage of total equity fallen, right?
Yep.
Total debt percentage of EBITDA down.
Yep.
Cash and short-term investments as a percentage of trailing 12 months doing pretty well, growing. So companies in the S&P 500 with less debt, more cash, more cash flow. Earnings are at historic levels in the S&P 500. Like, what has happened? Could it be the composition of the S&P 500 has improved? The companies that, and then they always cite like historic PE ratios of S&P 500. The historic is like 19. We're at like 29. It's like, Meet Kevin loves to do this shit. It's like, okay, well, what's in 20 years ago? It was what? IBM, Exxon, General Motors, General Electric, right? Cisco. It was just random companies, no real specific type or sector. Now it's tech companies, and tech companies, we know, like the mags, like the big tech companies. What do we know about them? They're cash flow machines, highly profitable, still growing at double-digit rates, still have huge prospects. Growing prospects and tailwinds galore. Like, these are different companies. Like the top, like the S&P 500 companies at the top are superior, better, more efficient, profitable companies than the ones that were like there 20 years ago. So of course it's richer valuation. I can't stand these people. Like, of course, like Microsoft, is a much more profitable cash flowing machine than like freaking 20 years ago. What are you talking about? General Electric, something like that. or a cyclical oil company like Exxon, right? It's just like, anyways. So the answer is whenever, just keep buying. Like if you have an indexing strategy, do it. I don't know how else we can help people. Bacon, it's pronounced cow pound.
Dividends?
SCHG is up almost 30%. I banging the freaking table. It's the best ETF that I've ever seen. Like, and I put money in it. So I don't think you can do any better in SCHG. And that's my comparison to anybody that tells me they're a growth investor. I'm like, okay, I'm going to compare you to the gold standard of growth investing. To me is SCHG, not QQQ, because SCHG includes the mid cap, some mid caps in it. So let's see. Without government deficits, there would be a negative GDP. Ooh, interesting point. GE is a serious turnaround. Of course, I sold and bought another G. Yeah, for real, dude. Oh my god. If you could have bought General did
Electric.
I free?
Yeah, you seem like you're frozen on StreamYard right now.
Oh no, I froze.
But I can hear you.
Okay, hold on. You can hear me still?
Yeah, I can.
What happened to my camera? Okay, let me leave and come back.
Alrighty. Hopefully this can still work.
Hold on.
Doobity-ba-beep-do-bo. Beep-body-beep-bo. I love that that's known as the hamster dance song, but like my first encounter with it was the animated Robin Hood movie from Disney. Hey, and you're back.
Did it? Okay.
Yes.
Jeez, that was weird.
That was weird, but it's okay. We're still here.
Yeah. So, anyways, the whole ridiculousness of saying the market is overvalued. Like, anyways, if you have an investment strategy where you're like, I'm going to put 50% into the SP500, okay, you can debate what you're going to do with your like satellite holdings. That's the whole point of a satellite holding. Anyways, you're trying to outperform the market. Okay, you got some play room. Maybe you want to hoard cash in your satellite position. Maybe you want to hold some SGov and you're just waiting for the market to go down to buy something. But your core investment should never be paused, ever.
Yeah.
So.
And the whole valued, overvalued, undervalued thing, like when it comes to the broader market, is for me, it's almost like a who cares? Because yeah, like optically, a tech company can look overpriced and expensive. You know, maybe there's some considerations there, but then again, you throw in like a Costco that I wouldn't argue is like as pure play tech.
Okay, this made me laugh. Okay, Vong.
Alright.
So
Okay.
Vong is it's basically SCHG, but it uses the Russell 1000. Same idea. It's a growth strategy. You know, seem a little different indexing, but pretty good growth strategy ETF. Not large cap. But this guy wrote an article last summer. Vong is a great fund that is priced for perfection, which is an interesting term for a fund that has like 300 companies in it. Like, what do you mean it's priced to perfection? Are you saying the market's overvalued and can't go up anymore? And then look at where he wrote the article. Look at the dot. Last July.
Yeah, you're like,
right here.
yay, I'm right.
What happened since then?
And then no.
So it was priced to perfection, was it? No, I don't think so. Look at that. I love how they do this with the articles too. 33% change since he wrote that it was priced for perfection, and it went up another 33%. So it's just ridiculous, people. Like, to say like, oh, this ETF is priced richly. It's like the fuck you talk, like an index ETF. Like, what are you talking about? Oh, VT is overvalued. You know that?
No.
Oh my god. Yeah, 9,000 companies. No. What the hell does that even mean? So, okay.
Strongman is ruined.
He's going down.
Not really. Yeah.
So
pretty sure he'll be just fine.
All right, we got to take a break from making fun of people. But so housing recovery this year, nothing, right? Mm-hmm. We were hoping for this year, but so here's a report from August. I was trying to find something for October. I didn't find anything with good charting. It's still down. year on year from 2023, a lot of the housing sale and construction from 23 to I had September to last year to this year, it was down like 2.5%. So we're not in a recovery yet. We're still like slightly downtrending with housing sales, new home permitting. Nothing's really turned yet. So you could see existing home sales, we're still kind of on the downward curve. Median home prices, though, if not, they're still kind of inflecting upward. So it's something to keep track of. And then you can see, so it's not like still cratering. So we will see. But Master Brands is doing really well.
Oh, yes.
Our weapon of choice.
Yeah, I happen to be rather content as a Master Brands shareholder.
Yeah, we've had a good time actually.
Oh yeah,
So
yeah, and I came in late.
I am up. I think I'm up 35% on this at this point. So pretty happy. And so, someone's going to be like, "Well, you should have bought like Builders First Source. That better return, or what about this company, or what about this?" It's like, okay, I have my weapon of choice for home built. You go have yours, but you can't have them all. So I feel really good about this company, about where they're set up. So I don't know. I'm really excited about it.
Yeah,
I think they did an acquisition because I think they saw that they instead of building out facilities and getting ready to increase their inventory for expected home growth, they saw that it might be a little longer than expected, maybe next summer, next fall, the recovery. So they acquired a company. Then they did some expansion of their production facilities. So I think they're setting themselves up for the expected recovery with rate drops. I think they're pricing in like 200 basis point rate drops from now until like next year. So I wouldn't expect housing to recover at this point anyways, but some of the stocks have run like housing has recovered already, which is fascinating. Like Builders. Oh my God. I don't know how you could own this company long term. This fucking company will give you a heart attack. There's no way. I couldn't imagine owning this company like long term. Like it literally went from 200 to 130 in like, it felt like the blink of an eye. I mean, it's like 2 months here, but it felt like it was like 2 weeks and it cratered. It was unbelievable. And then everyone's like, "Oh man, should have bought it." It's like it cratered so fast, it was terrifying. I don't know who had the balls to buy it when it went this low. So props to them. But this company's unreal. Its movement. It's not my pick for housing. Like it's just too volatile. I don't like this. So I mean, this is the trader's dream for housing to me. This company is nuts. It'll just like 5 to 8% swings in one day. And I wouldn't invest like long term. I don't know. I kind of get scared about this because Home Depot is going to be moving into this space with their recent acquisition. So Home Depot is going to get into actually the suppliers. So I'd be worried competing with Home Depot if they choose to get into that kind of business. So I don't know. But let's see. Dan, is LVMH traded over in the market, or you trust the out kind of market? No, isn't it an 80? It's not an ADR actually, is it?
Well, for me, my play was the ADRFs.
These are ADRs, right?
Yeah. If my memory serves correctly, yes. And I trust it enough. Like I've asked around with different people, and generally speaking, the Fs are all right in ADR terms. And there's a transaction cost if you're a poor person like me to consider. But that being said, though, like right now I look like a wrong fool because if you add in the transaction costs, I'm down. Without transaction costs, it's just roughly flat. And again, I had an idea of what I was in for with this. Their most recent report seemed rather ugly in that like the leather products had a decrease in sales. I want to say their alcohol and spirits also were down, and that was somewhat to be expected. But it is what it is. I suspect longer term it'll work out well enough.
Yeah. So I actually, when I did my LVMH episode, I had someone messaging me directly that used to work for them.
Mhm.
They gave me some insights about LVMH, how they some of the advantages. They said it's not all their and because I'd mentioned like I was concerned about the wine business because of just downtrend in wine. It's like a secular decline. It's not just LVMH. And he was like, they're not really in wine. He's like, they're more focused on champagne and Hennessy in particular. And he's like, the champagne business has been good for them. And then Hennessy's been in a downward trend. So, and then the wines declines. I don't think they're temporary, honestly. I think wine is just trending down with younger people like me. I don't know anybody that drinks wine. Anybody in my like, most of the people I know in my life are like late 20s to like mid 40s. I don't know a single person that drinks wine on any sort of regular basis. So I do believe that. I don't know if that comes back. I think our generation is more like a beer, whiskey type generation. If we even drink at all, like alcohol consumption's down across the board in general. So, but he said like the champagne business was doing well for them. And then obviously we all know the China, the dilemma is China. A lot of the growth baked into LVMH was China. And he was telling me like they have like this huge real estate portfolio, which I didn't even get into because I was just talking about my concerns. I hadn't even got into like what I thought what I liked about LVMH because I didn't have time. But the fact like their real estate portfolio, they I think they swooped in and they were buying a lot of real estate during the lockdown period at probably advantageous prices and opportunities. Also, they control like in some parts of the world, they control like the entire mall, like how it's designed. If they're going to go into like these shopping centers in like Asia and China, like they're the ones in control of designing how they look and the layout of their stores. So it's interesting. It's a lot to get into though.
Oh yes,
I'm not there. And then I kind of put the research off as soon as we talked. I did the episode like the next day, the goddamn thing went like 12%. That was the day China ripped. So I just put it on the back burner because I'm like, all right, maybe I missed my boat on it. It's all right. But it's come back down really fast. Like that bump did not last. Like
no, it did not.
I do not believe in a China recovery. This is what gives me pause. I'm like, can I make a thesis for LVMH without China recovery? Can I? If I can't, I probably just move on. It'd be all right. But I don't believe this economic bazooka thing is going to make a difference.
Oh yeah, that
like reality on the ground. I don't think it's going to make a difference. It might make Western investors think that things are better and dump money into China. But my opinion never changed during that whole little cute run they had. My opinion on China hasn't changed. You can trade it. It's not a real investment. But the BABA people thought they had won. Didn't it go? What's BABA at? Did it go under 100 again? Yeah, it lost some of it.
Yep.
Freaking fools, Aaron. I mean, just buy all of China if you're going to invest in China. To pick specific companies, lunacy. But okay, I don't even know where I left off in the comments now. Oh, holy smokes!
Yeah.
Dan interrupted. Had to buy more Riley Financial. Oh, I have we left. I waited until some confirmation of stuff. I think it ran back up to like 6 and then I
yeah. Yep.
My puts now are as far out as I could get them. So I think I went to 2027. So whereas my original ones were 2026. But I'm in it for the long haul at this point. I don't think they can survive because when I jumped back in, now we had like more color on the investigations that they were under, a little more color about their finances, that they're broke and they're just selling pieces at this point desperately, and all the investigations. So when it ripped, it was like this one of the little bumps when it went from like 5 to 6, and then I got back in. And now there was another, every time there's a little piece of news, it kind of rips up. It's
the most recent one was they're selling like their appraisal or like liquidation servicing type business line to Oaktree, I want to say.
Do people understand how selling, like broadly speaking?
Yes.
you have to have the shareholders vote on this stuff. You cannot have a vote if you don't have all your filings done.
And what don't they have done?
They don't. So it's like every time I hear this news where they're like, they're going to sell this, they're going to sell that. These people are buying this. Like, they can't sell anything. They don't have filings. Like, they can't even bring it to vote to sell this shit. It's hilarious. And the stock rips.
I love that also, like, the news came out, but you had to wait the next day for the 8K, the relevant 8K to show up on SEC Edgar. And when you actually like read through the details, you're like, oh, there's a headline number there. But when you really dig into the details, it's like, nah, your headline number is kind of BS.
Why would you need to hedge if with SCHD? Oh, he said he was hedging the market with SCHD.
Oh, that's
what? Because they're lower beta companies. SCHD is lower beta than the market because there's no tech in it, right? Except like Broadcom was in it, which they took out. Remember we said, like, when they reconfigured it, I hated when they pulled Broadcom out. I hated it. No person would have taken Broadcom out of that thing. But that their methodology is math. It's not people. So no one wanted to buy G at 10. Now everyone's buying it 30. I swear to God, man, if I could go back in time, I know, I guess obviously things have done better than that, but if you could have bought Apple before, like, didn't it get down to like $10?
Oh yeah,
before the company went into 3 places.
Yeah.
Like, what would I should do the math. Like, what would the return have been if you bought it like at its lowest before it then split? And then you have, obviously, I don't remember what the share split was exactly, like how many shares of each you got, but your return's got to be fantastic because all the split off businesses have done pretty well, actually. You had a good thesis on buying the healthcare one.
It was one where, like, it was happy coincidence, and
then it ripped 40% and you were out.
Yeah,
you missed it. But you had a good thesis on your write up on it was good. I think you wrote it up, didn't you?
I did, and it was a combination of a write up of like things that I got to see from like a middle manager who happened to be at my school at the time, being like an adjunct professor and a guest speaker, and like, I took a little bit of what he said, asked around for people that knew that industry, and
there was one real estate supplier, because I told people in my capital mindset that I don't want new home builders, not interested really. I want like suppliers that also have their fingers in like the new and the remodel and the wholesaling business. That's what I look for, or some interesting product like the hurricane windows. I can't believe I lost. You imagine what that stock would have done with the 2 hurricanes back to back?
Oh yeah.
Can you imagine? I fucking was going to buy that stock at like, I think it was 35. I swear to God, it would have doubled with the 2 hurricanes back to back. It was a hurricane window company. Like, it was such a perfect climate change / also people moving to parts of the country, the Southwest or the Southeast, right? Building cone changes. It was a perfect Dan trade. Like, that's a perfect investment for me. And then they got bought. And like, I could have got part of that too. If I had found it like 2 weeks earlier, I would have got bought out. Got like 15 or 20%, I think, was the selling, because it went from like 35 to 40 something was the buyout. But I don't know, like, I've looked at Owens Corning. The only thing they do acquisitions to grow, which if I ever see a home supplier company, there was one someone asked me about, and I went right to the transcripts of the last quarter, and like right in the beginning, I'm reading like the CEO or the CEO's like notes or what he was saying, and he literally said, he's like, our plan for growth is acquisitions, and I was like, nope, don't want no part of this business. Like, that's not a great, for investors. I think that's a pretty shitty growth plan. I don't think it works. It's hard to execute well, right? Yeah. Buying a bunch of companies at, hopefully you buy them at the right price, which is hard to do. So I don't know. But it wasn't, I don't know if it was Owens Corning. I don't know. They're not focused. Sometimes when I looked at it, it was like they weren't a focused business. Like, they do a lot of different stuff. They have like this green technology. They do roofing. I just like, I thought they were just like too much. It was too much variety. I don't care about this. Yeah, you got roofing, insulation. Then they had like windmill. They had windmill technology. Yeah, wind energy. Well, that kind of concerned me because like a lot of the windmill plans, the ocean ones, were getting canceled. I don't know. It was getting to be like conglomerate-y. I didn't really care for it, but master brands, it's like cabinets. If they freaking ever tried to buy something that wasn't related to cabinetry, I'm out. Like I want them to be singularly focused on kitchen cabinets, being the best kitchen cabinet company they can be. Which you'll never hear that from Meet Kevin. So, for Gil. Chegg, bro, like, I know what you're thinking. Gil's thinking one piece of news and Chegg will rip because it got pulverized down like 99%, right? Because people are like, why are kids going to pay for Chegg when you can just go to chat, free AI software modeling, and you can get, answers to tests and stuff. You don't have to pay Chegg. I don't like I guess you would buy it and just hope one day it was pop. I don't know. That's not investing. I mean, you're gonna start good luck to you. That is, I don't like software companies. I don't like any software companies. I think all of them are kind of shit investments, tell you the truth. Like long term. Yeah.
Which makes sense given your SCHD profile, and I imagine like
I just don't think software is a moat. I don't think it's defensible. It's defensible until someone comes up with a better software, right? Some kids in a garage can just out innovate you. It's just not my thing. Oh, Gil, good luck to you there. Maybe it rips 40% one day out of the blue. Let's see. 10x Dan. Well, everyone's 1000x these days. I don't mean to brag, but lately a lot of my investments have like doubled. I've gotten some pretty good affirmation. It's pretty interesting. So Carrier doubled, Tran tripled. I am $12 away from Curtis Wright doubling.
Very nice.
That's I'm not joking. That's kind of the standard at this point. If I don't think it can double in the foreseeable like 2 to 5 years, like just buy SCHG at that point. Like, what are you doing?
Good old joke.
How do I Standard Oil? What's the tick? Oh my god. Yeah, could you map that out even? You'd have to do that. Would be like a master's thesis. Could you map that out? Like, what would like 100 shares of Standard Oil? What would it be even today? You'd have to do some work though, because
that would be a lot of work.
It was like 20 companies, and then like a lot of them merged, and it only became like 4 or 5 companies today.
Yeah,
but then some of them would have gone out of business, I would assume.
Mm-hmm.
Yeah, man. I wonder what it would like. That'd be interesting to play that out and see.
Yeah, and then you'd want to also total return it because I imagine they've been paying, a lot of them paid dividends along the way.
I wonder what the most profitable breakup that you could have owned before it was broken up.
It's a great question.
AbbVie would be on the board because you'd have AbbVie and Abbott Labs, and I think they spun off like 1 or 2 other drug companies. Mm-hmm. So General Electric, you could say, because they broke into 3. Standard Oil would be on the board. AT&T, the original AT&T, that would be on the board because they got broken up. Mm-hmm. I don't know. You'd have to like, that'd be tough to figure out though. It's a spec pay as you call. I mean, I don't know about. I mean, if you got some specific piece of news about Chegg that was positive, something could happen. Let's see. What's this one? That 10x was about the G if you bought it low. Yeah. Man. Well, wouldn't GE have the ticker chart, right? It would have kept the chart from the past.
Should. Yeah, because like it
maybe.
It definitely was pummeled around around 08.
I can't say
I
if
want to
this
say.
is because they must have done reverse splits. Yes, they did a reverse
Yeah.
split
Yeah.
actually. Because I remember it got down to like man, it was like $10 a share at one
Mhm.
point. Then they reverse splitted it. I think they did a 10-to-1 reverse split, maybe. It got bad. It was really bad.
Oh yeah.
So they were an acquisition monster, and it didn't work
Mhm.
out. So okay.
Yeah, that was one of the things to do way back when is I know how to value GE properly. And it's like, yeah, they had a lot of businesses there.
Oh, okay. With housing, this I won't even be able to freaking plot this episode. I swear. I thought this was kind of interesting with the housing piece.
Mhm.
So this is from Freddie Mac. The difference between housing prices of entry level compared to high end price index. So like
Hmm.
the average price,
Yeah.
right? First house, next house. Like for me, I bought, my first house was like 600 square feet, and then now I'm in like 3,000. So look at the gap that has been caused by this huge increase in mortgage rates. So look at how the price index of entry houses has increased exponentially more than the
Yeah.
high end. So what this is telling us is, do you know what it's telling us? Most likely,
My suspicion is there is viable demand there.
this is telling us that people are holding on to their entry level homes longer
Oh yeah. Yeah.
because the demand is there, right?
Mhm.
So if people are holding on to their entry level houses longer, there's
Mhm.
less of them on the market, which would cause the price index to increase on entry level homes. So entry level homes would rise in price, right?
Yeah.
Like ideally. So there would form this bigger gap than traditionally. So as you see, like traditionally, there wasn't that big of a gap. And then it
Yeah.
started to grow and grow and grow now the last few years. So, and I've seen this in my area, like for sure, like the bidding war, the entry level homes get more bidding wars and more price interest than there's a certain level of price in everyone's area, I'm sure. Like you get to a certain price threshold, most people can't do it, right? Like in my area, it's kind of like 600,000 and above. They'll be on the market you could see for months. Whereas the stuff that's like under 300,000, man, gone. So it's interesting. Like this is just a repercussion of the fact that we had 3% interest rates that became like 7. So people were in these entry level homes and they were stuck, right? Because you couldn't make the math work anymore to upgrade to your dream home when rates went from 3 to 7.5 or whatever. So here's one of the byproducts of that. So this is telling us too with housing, right? There's this entry level home demand you would think to move to a higher end home. So there's people stuck right now in these beginning homes that they want to move on from. We hope. So I think good sign for master brands. It's all about cabinetry. It's all I care about. So. But there's many weapons of choice for home build, like for people like if you want to play homes and the recovery of homes, you got the home builders if you want, like Toll Brothers and Lennox and Builders First Source, Owens Corning, the company we picked. There's some smaller suppliers,
Mhm.
Home Depot, like all sorts of them. Home Depot, you get the hurricane bump. So, okay. Let's just get rid of housing. We had an hour. Oh my God, we're at an hour.
Yeah,
Okay.
we are. Yep. Pretty much. Yep.
Election impact. Yeah. So I was looking at some other charts. Nothing really that I would find these charts and they just look like crap. I can't show them on YouTube. Like just a numbers chart. It's
Mhm.
hard to really convey anything. But when Trump came in, I was looking like what did well when Trump came in, right? So JP Morgan, Lockheed Martin, Bank of America. So banks, military, it's not hard to figure out why they did well when Trump came in 2016. Just traditionally, that's what people expect a Republican president, to do. So, but the banks have been on a tear this year. And I think that's part of what's baked in the banks recovery. You've got, um, lowering interest rates, hopefully. So they don't have such huge losses maybe on the Do you remember like Bank of America had that huge loss they were carrying?
Oh yeah, yep,
That came out during the regional bank crisis.
yeah.
They were carrying like $100+ billion of like unrealized losses on freaking I think it was treasuries and bonds that they were buying during the recession at like 0.7 interest rate or something. So those losses can get reduced now that we're lowering rates again, and then their cash flows are getting better. Now that yields are up on certain products, that's to their benefit. People would, more interested in buying, CDs and stuff at 4 or 5%. Military, we always know, like, military just goes up.
Yeah, good old.
I mean, you got
defenders.
wars around the world. Military investments are not hard to figure out. People are assuming there's going to be a lot of military production because of the wars going on right now. All the military stocks have been fantastic. So my baby, my favorite. I have to say, I never posted on my channel. I just left it on. I don't know. This is like my most favorite investment. I swear to God. I just, it makes me, I don't want to, I don't know, it makes me smile looking at it when I look. I just love it. And actually I bought it. No, earlier than this. I think it was September.
Yeah.
Yeah, because it was 190s when I bought it. So it was like right here. Friggin' nailed it. The whole thesis was perfect. Like I was so happy about that one. So
I'm just chuckling because at least one, maybe two smart people that we know joined in, but they played it wrong.
and they
So,
sold it.
yeah,
I like was pounding my fist. I'm like, to be clear, I even was clear. I know I said this. I'm like, this is not a trade. This is a 40-year investment. Like 40 years. Like the thesis on this company is 40 years. So it's like, if people say, is it too expensive? I'm like, I don't know. The thesis is 40 years and we're like 2 years into it. So I don't know. Value investors will tell me I'm expensive there. Paint. JPM will carry me to the promised land. As long as Jamie Dimon is there, I mean, I should have held it. I shouldn't have sold it. I should have held JP Morgan. I wish I had JP Morgan and Goldman Sachs right now. Oh, man, there's some doozy investments that I did not pull the trigger on. I can tell, man, they would probably outperform what I actually did buy in some respects. So what are you gonna do?
Yeah, well, when you're a one person shop, you only have but so much time, and there's only so many things. So
Yeah. So I mean, like looking at Trump and Harris, obviously the big difference people make is Harris wants to raise corporate tax rate to like high 20s, and Trump wants to lower it to like, I think 15% is like the world standard minimum, isn't it?
If I recall,
I think by treaty, it's the minimum corporate recognized rate is 15%. I think I saw. Because like ideally, like I've read research papers where someone's like, the whole world should just agree on a corporate tax rate. That way corporations would not have any incentive to go anywhere else but their home country. Right. But then you wouldn't put a headquarters in Ireland. So you're not going to get countries to agree to this.
Yeah.
So
and
if everyone had the same rate, they would all just have all their money here.
Yeah.
Why would you? There's no tax shelter at that point.
Yeah. And just like, as you know, with like corporate tax and any sort of tax structure, there's the tax rate, sure, but then there's so many incentives and other things that, fiddle the numbers a little bit around.
I think 21% is a good rate. I don't think it should change. I don't, because like, I don't think we should have a 15% corporate tax rate, because I think there is a premium to the US compared to like sheltering your money in like Ireland or freaking Bahamas. I don't know. I think you should pay a higher rate for operating in the US than the minimum. So I think, so my answer would be like something between like 16 and 21. I don't know. But 15's flashy.
Yeah.
Trade policy. I mean, obviously we know what Trump did with China his first term. That was the one policy I agreed with the most about his first term.
The tariffs.
His willingness to try and fight right back at China, because no president in my life has done that. So I did agree with that, to try and combat like the problem of just like the trade deficit with China was just massive. Regulatory differences. Obviously, everyone assumes that Harris is going to pass a bunch of like environmental standards. What's like, she's not like a dictator. It depends on what's the makeup of Congress.
Oh yeah, and it's a huge.
That's the big. All these things are like pipe dreams. Okay, who's running the House and who's running the Senate?
Yeah.
So we'll see. Because if you're not running all three, and even if you run all three, the other party can run freaking blocking on you. So, oh well. And then the drug. Now, this is one that I wonder about if you like to invest in health insurance companies, because Biden has been very strict on the drug pricing. He's been really adamant about allowing Medicare to do price negotiations with like the top 10 drugs in Medicare. And I think Trump would probably strike that. I don't know if he specifically said if he agrees with that or not, but I have a feeling he wouldn't do it. So that could be actually really like healthcare is what might be really good under Trump if he wins. Health companies like United Health or something. Like Medicare, like the rates of reimbursement for Medicare have been taking a beating, which is what's been killing Humana. I mean, Humana could be a garbage trade if Trump wins election. Now that I think about it, like Humana's not a company you want to own long term, but it could be an interesting trade his first year. If they reverse some of these pricing policies that have been done under Biden, like I can see some companies benefiting from that. I probably wouldn't. Drug companies are trickier than the health insurance companies, though. So I don't know. I'm more thinking about next year. I'm not really. Yeah, next year investments most interesting. Anyways, let's see. Harris and Trump administration will do 95% the same stuff. I mean,
probably.
Yeah,
Odds are
pretty much.
Yeah. I
work in the government. There's not much difference. I barely notice any change between administrations ever. I started during Obama's. Yeah. Well, technically in the military, I started during George Bush, but sell everything and buy biotechs. Really? No. I was talking to Biotech about Amgen. Kind of interesting about their weight loss drug, because they have a phase 2 weight loss drug, and they've kind of gotten beaten up, Amgen, lately. But I guess some of the side effects are not too bad. The weight loss, I was told the weight loss results so far have been very impressive with the Amgen drug. And I guess the one differentiate, I'm like, okay, that's cool, but what's the big difference between that and like the Eli Lilly drug? And I guess theirs is potentially a dosage of once a month. Now that's a big difference, because Eli Lilly's drug and Novo Nordisk's drug are weekly. So to then have a monthly app or drug, like that's big. But I from what I can understand, it's years away. If they could even get this thing cooked up, and then 2 more years of Eli Lilly building out their infrastructure on their drug. So I don't know. It doesn't seem like very investable at this point. But if you buy the SP500, you get all of them. So I'm voting for Paul. Oh God, why?
No,
to
which
market
Paul?
Crash. So last thing. Anyways, I don't have any particular military stocks right now. Like, I guess I like the military investing episodes are my favorite ones, but there's just like nothing. It's not like always something interesting to talk about with them.
Oh yeah. I like doing research.
This company is like, this is another company that like I love it. I don't know why. It's my favorite. It's one of my favorite companies I own. It hasn't performed. It's not even close to the best performer. I just really like it. I don't know. This is my like. I think it's like the most advanced company in the world, technology wise. So I just really like to hold it. And I didn't get a good price on it, but I don't care. Don't care. It's mine, because I was buying it like here. No, not there. Wait, 20. Yeah, here. I was buying it like I was not doing well with it, like high 400s, and it was down for like a year, and it just finally now the last month is like, now I'm in the green finally. But that's all right. They have the best runway of any company in the world, because these people build some of the most advanced technology in the world. So
Oh, yeah.
ultimate runway. They build telescopes and rockets and all sorts of stuff like that. Advanced missile systems and defense, cruise missiles. So,
I love that so many of the things that we just use on a day-to-day basis and don't even care about were products of R&D from these companies.
I know.
DARPA.
For real. Wait, okay.
Nuclear power. Did we talk about energy?
I think I'm gonna have to change the thumbnail because it's too late to talk about
It's
that.
fine. It's fine.
It is. Well, I don't have a lot to say about it. I just wanted to put a thumbnail up, but it is so interesting. All of a sudden, like nuclear power is so hot right now. It's so interesting. And we talked about it in the community months ago. Like, because we're like, they need all this energy production for this data center usage. And we all kind of knew like green energy wasn't the answer. It just does not work. It doesn't work all the time, right? It only works some of the time. We don't have battery storage for the times to like store the power. So what were the options? Like nuclear was the most obvious option because it is green, which they don't believe it, but it is green. It doesn't produce carbon. It was the most obvious solution to data centers, but I don't know. But now here it is. I mean, you probably should have been in it like months ago. I don't know. There's some juice in it now, I suppose. I'm going to be looking into it more myself. But there's some interesting opportunities possibly. They're gonna restart the Indian Point nuclear power plant in New York, which is only a few hours from where I live. So that's huge. Yeah, when they stopped that, it was big news in this area.
Oh yeah.
And they shut that thing down. And I always was like, why? Why did they? I don't understand why they shut it down. But you get it now. There was like political pressure by certain groups were put on them to get rid of nuclear power options. But now you have big tech is going to start pushing for these facilities to come back online. So interesting opportunities. Yeah.
I do want to give something that hopefully is useful for the viewing public here. Based off of my interactions with some of the people, or at least one person in particular, trying to respect their privacy in Fabio's Discord, but also there's a podcast called The Business Brew, called from Bill Brewster. They had like basically their most recent episode, right there, Mike Alkin. Talking uranium. It kind of is a bit of a victory lap episode, but I think that one was very useful in that if you are looking at uranium, depending on how you play it, do not be surprised if some market participants default to the mindset of, oh, what's spot price uranium at? And that speaker advocates that don't do that, because a lot of uranium contracts for different parts of the supply chain are done with long-term contract rates, and those will change over time. But the thing with the spot price is that it's not a very efficient market. It seems like there's only like 5 participants. Yeah, they got some money to work with, but it isn't the most efficient structure. So with that in mind, you can expect weird movements if some fund managers, or enough fund managers, are like, oh, we understand this, but what's spot? Oh, okay, spot's this, up, down. Maybe the stock price for XYZ company reflect that. So just be aware that that could be a component for the ride you're in. But like, is that really the right thing to do? Maybe, maybe not. Again, I will leave that up to you, the viewer. Just food for thought. Something that I've stumbled and am trying to digest and wrap my head around.
Yeah, I didn't really ever consider. I'm not a uranium. I've only really invested in one commodity in my entire life. Well, I always I don't consider oil a commodity. Sometimes in my brain, I don't know why, but copper's the only thing I really have ever invested in.
Yeah.
So I would probably still approach this looking at nuclear power and nuclear suppliers, like one company that does subs and nuclear parts and reactors that we know. Yeah, it's an interesting investment. I think a lot of them probably have run up already, but I don't know if that's that doesn't mean it's not an opportunity. That might have just been the first, dump of money into because there was the news. What was the first nuclear news? Was it the Microsoft, right?
Possibly that might be one of the biggest waves.
Yeah, because Microsoft made a deal with a nuclear producer. I think that might have been the first piece, and then there's been some other news coming out about nuclear. So we will see. But this is all very slow moving stuff. So, and then you got Southern Company just started running their new nuclear reactor. And it's interesting, the stock was like 70s, now it's in the 90s. Southern Company, now that they actually have the thing up and running after they spent $20 billion on the damn thing, 10 years to build it. So that's what you're dealing with talking about these things.
Yeah.
Like, I would be more interested in investing in like nuclear power plants that exist and are running, or companies that provide like supplies and equipment to like run older like nuclear power plants. I'm investing in new ones. It's like I'll be retired before they freaking come up and running. I swear to God.
Oh yeah. The budget bloat and the delays in timeline.
Yeah, and I know some people are really excited about the concept of like these micro nuclear reactors.
Yeah. The either that or modular or something. Yeah.
I don't buy it. I would think a more investable thesis is pre-existing facilities at this point, like new technology / and new nuclear technology. I think that's a long road in America, like with the public. So, I mean, nuclear disasters, right? There's only a handful of them that have happened, but they've terrified the public.
Oh yeah.
Fukushima. I remember. Do you remember Fukushima?
Oh yeah. That was quite
Scared
a big
the shit out of everyone.
Yeah.
Like, all of a sudden we're like, oh, there's a nuclear meltdown, right? And the whole world hears about it immediately, and then we hear about the aftermath of how much of a disaster that has been. They have this farm of tanks of nuclear wastewater, right? And they just kept building them, all this storage. And then you had the accident here and Chernobyl and all that. But yeah, they're terrifying to think of. And nobody wants to live next to a nuclear power plant.
Yeah. The good old
where do you stick it? You got to stick it hundreds of miles away from everyone, right? It's hard to figure out where the hell you put these things. You need water resources. All right, I guess we should finish. Got to finish with me, Kevin. We already made fun of his tweet.
Oh yeah.
Oh, look at that. I didn't even know that. I know he said he had some new investment coming. But this made me laugh. So he put out the tweet. We already covered this last live, where he's like, sell your stocks and go fucking just run away, come back in November. Because typically there's like the sell-off, right? September. So he's like, sell all your stocks and then walk away and then come back and wait for the big drop, right? The dip. The stock market's ripped since that tweet. Like, everything's freaking at all-time highs right now. Never been better. So he kept posting like that he was a flip-flopper like he always does, but like he got smashed on Twitter and on his channel about like how embarrassingly wrong he was. And we posted his fund PP was like down at this exact same percentage that freaking VT was up. It was hilarious. The 1 month chart was almost perfect, like split 4.5. Like VT was up 4.5 and PP was down 4.5 in a month. It was so funny. And then all of a sudden he's like, I quit. No more of this recession talk. I got a new video, new investment coming. You watch. So
live streams, course member lives, or videos
the great
of Black straight up being wrong with a bearish narrative. So let's get a few things out of the way. First, I've got a really big reposition I'm working on, and
so that's it, right? He just goes, oopsie, I was wrong. Sell all your stocks and come back in a month. Oh, I was wrong. Oopsie, sorry. Like, people are like, oh, who cares? Like, if someone had done what he said to do, which some people might have done it, right? If people sold other stocks, now they're damaged. And he just will reset and he just marches on like nothing happens. Like, oh, I can't even imagine people that listen to this guy. I don't understand what you're thinking. He's been bearish for a while now, and he keeps saying he's not. The data. Oh, the data. Oh, all he does is just spout a bunch of macro bullshit. That's not even right. And we talked about like the S&P because he's one of the people that has said the S&P is overvalued too, I think, which is nonsense.
Yep.
Well, anyways, we'll hear more.
I want you to hear about it. That is going to be probably a $3 to maybe $5 million position. Could be as much as 6, 7. I'll probably grow it over time, over the next
probably fucking Tesla. I bet you it's Tesla.
3 to 6 months or so.
Let's go.
Crisis. I know Iran can seem insane, but let's just be real. The clearest of day signals you need that they're not fully insane is that they communicated their coming strike to the United States.
What do you
in Taiwan,
let's
but
get somewhere.
Not while they're trying to stimulate and get themselves out of depression. Yes, I know they're doing drills around Taiwan. They'll keep doing that. Of course, they have to.
So now in response, Israel has suggested, okay, really hardcore Democrats or Republicans, or you just listen to me for perspective.
Oh wait,
that's the whole point. I don't do because I just feel like we connect like on a daily basis, and even if you just inverse trade me or you just listen to me for perspective, that's the whole point. I don't want to bring you crap that everybody's saying that
this is peak. This is peak coping and seething. Like this is peak cope seethe at its finest, because he's been so fucking wrong for such a long time, and it's just like it's got to be getting to him. Like he thinks he's there. Like he looks at all this nonsense macro information and he's like, I'm there. I see it. He's like, he's playing 4D chess in his head. He's like, I see it coming. No one else does. No, I'm going to be rich. And then it's like, I don't know. Maybe was like the point where he's like, like I'm wrong, but it's okay. We'll just turn it around. I have a new investment October 21st, and the party continues for him. But to be this wrong, like if he was on Wall Street, he'd be fired right now, because they're like some of the biggest bears in Wall Street have been fired this year. Like people are sick and tired of hearing it because it's not true and it's nonsense what he talks about.
The same crap all the time, because then what's the point? I'm not sharing any value.
He doesn't share. What value does he share? I don't understand. Like, what value does he share? But we can compare PP to VT. Like I'm like serious. Like, well, I don't know what value he provides. Like, if you listen to anything, if you invest in him, you've been damaged. Like, you've lost money. You've made stupid, rash decisions in the market. You would have shorted Costco this year. Remember when he said to do that?
Yeah.
I tracked that whole thing, and I had insiders give me the his Discord announcements, because he didn't say publicly he sold that short or ended it. So I found out he did it in his Discord though. So publicly announced he was shorting Costco, and then when it went the wrong way, only announced it in his private Discord that he ended it. Friggin' hilarious.
But I really want to double, triple down on making sure that I'm in wedge deals. I teach it all.
Okay, we don't care.
We are kicking butt with our financial advisory clients. Do
you really think he has any financial advisory clients?
If they are, I scratch my head on who they'd be.
Chris and me laughed so hard when we looked at the backgrounds of the people he hired to manage your money. Like a bunch of freaking unemployed dorks that were college dropouts and EMTs are going to manage your money. Like, unbelievable. And he's like, well, no, they're just like a sounding board. They're just a pathway for you to get to me, Kevin. It's like, well, you freaking suck at investing. Go look at PP. We can literally look at his performance in the markets. It's hilarious. You can't argue this. I can go look at PP's chart and see that he doesn't perform.
Stockhack.com. Do you not?
I don't know. It's just, I think a lot of people are just really into investing, and you're at your job, you're bored, and you just want to listen to something while you're working at your boring job. So, Meet Kevin does a live stream every day, and then he does like a 40-minute talk about macro bullshit. And it's just content you can consume, and you've convinced yourself you're really like being an investor. And it's just he speaks well. He's believable. He can show you some pretty charts. It's like a lot of this stuff is just like fucking nonsense, and it just doesn't matter. He draws these sweeping conclusions about like the economy based on like macro he found, and he pencils it. But it's about investing in real companies. It's not about macro.
No, yeah. No, I'd agree. Like,
Macro affects companies, but first is the company. You invest in a company, right?
Yeah.
And then you can assess like situations in the macro environment that could affect that company. But he's like looking macro, and then he's applying these macro standards down to companies, and then thinking that's an investment thesis.
yeah, because
It's been wrong. You cannot even argue with me. Like he's been completely and utterly wrong in this approach to investing.
because what I liked about what Peter Lynch said was like the stomach is the most important organ when it comes to investing. And in which case, like, if you're comfortable with what the company, the underlying asset is and what it does and how it would do, then you'd be mentally, like, emotionally prepared.
Look at this. You've been cut in half the last year. He's performed 36% for the market, and he gave you 19. I don't think we can do. Yeah, we can't because it doesn't go back that far. But I don't know what you're doing with this guy. So, did not talk about Tesla.
Oh yeah, good old Tesla.
Let's even get done in a half hour, but
yeah, this one might bump us up to like 45, 145.
I really don't want to fight Tesla people anymore. They're like it's like fighting a wounded friggin' badger. It's just trying to claw its way to some sort of thing.
Yeah, because apparently that's the big thing. Is how many years has this been where they're touting robo-taxis?
Like 2014.
Good God,
It's been like
10 years.
And he always says it's the next year, every time. And at this comp, he said production in like early 2026. So basically next year. And then, when are they going to be on the road? Oh, next year. It's like, okay. But like really a 2-seat car as a taxi. Like 2 seats, not 4.
Yeah,
Like what the
head
fuck?
scratched.
So what happens if you have a 3-4 person? Like I don't know. Like everybody I know that has kids, it's a 4-person family.
Mhm.
So like, okay, what is this? Like,
You can
and then you
put
look
the
at it.
kids in the frunk.
Now, funny enough, so I guess they were there like 2 weeks early, and they mapped out the entire Burbank facility. They mapped it detailed, and then they input it into these things so they could drive. And during the demonstration, they still kind of screwed up. Like wonder if I can pull it up. Oh. Was it hopefully did they get rid of it? No. So this is like CG. This isn't even real. Right. Okay, wait, hold on. Wait, they don't even have the demo? Okay, that's all you get?
Apparently,
That's it? Okay, yeah, so these are live, right? This isn't like city driving. There's like 1 car. Like, wait, is he praying that it would work? Did you see?
I don't know.
I haven't even watched this before. Actually, I didn't even watch it that night.
I am not aware that this exists.
All right. So anyway, like, what's funny is because people are like, why is Elon Musk so political all of a sudden? Why is he so obsessed with Trump winning? Right?
Yep.
See that?
Oh yes.
Biden nominates somebody to head the National Highway Transportation Board. So what does that mean? It's an appointed position. So why does this matter? Is that the National Highway Transportation Board has to approve a permit for robo-taxis because they don't have required standard or safety features. They don't have pedals, doesn't have steering wheel, doesn't have like rear view mirrors. So even though states control their roads, but certain safety standard points are controlled federally, like having a car that doesn't have a steering wheel. So he needs Trump to appoint a person that would approve, and rubber stamp robo-taxis. So that's one. That's why he's doing this. Whereas we all know Kamala Harris is in the bag of Google. So most likely she would, be in the pocket of Waymo. But there's that part. And then we also know, brand new investigation. I got so much shit when I last covered this. When I covered that they were being investigated for autonomous driving, I got so many hate comments about this.
No, over Tesla, the Tesla
Oh my
autonomous?
God. And the people that, when I started talking about the Tesla recall.
Oh yeah.
automated
That I
system,
remember for sure. Yeah.
I had so many negative comments about that. Like people attacking me saying it wasn't a recall, even though I gave them the recall like number. Where is it? Tesla. I was just reading about this. Yeah. So here we go. So a new investigation, and they're going to say it's a political hit job, of course, but the National National Highway Transportation Board gets, traffic and accident data. They also take reports. So they found out there were injuries related to FSD. And I think there were 5 accidents, or it was 4 crashes, and there were some deaths that were attributed to FSD software. So that's being investigated right now. And this is the same department that would have to approve robo-taxis for no steering wheel or pedals. So, and from what I understand, the accidents that they're investigating, the commonality is visibility issues, because it's a camera driven system.
Yeah, not
So
LiDAR.
I guess they've said fog and direct sunlight, and what else? Some other like rain can cause problems with the FSD system because it doesn't have LiDAR. So people have died like because of these flaws in their system. And there's some detailed articles that I've looked at where like there's so many just flaws, I think, in this whole FSD system. Like it almost gets to the point where you could say it's a fraud to even call it self-driving, to even assume that this is like something that you could just sit in the back seat and let drive you. There's no proof of anywhere being close as far as FSD like actually doing this. Like what was it? You can watch so many videos online where people constantly have to take over the car, all the time. Like you're just driving and the thing just decides to turn left all of a sudden, or it starts like going into add another car. So I think I don't want to get in an argument with these Tesla people. I think this stuff's a pipe dream to think that we're even close to this idea that you can like have 20 robo taxis and you push a button and they all just go out into the world and drive people around, come back, and you collect money. I don't even know how to say it's a long ways off is even. I don't even know if it's even possible with the technology we have and the restrictions and safety standards of America and our government. I don't see it, but I can't convince these people it's not happening. No.
Well,
But if one of these investigations actually does do something like, actually huge lawsuit that, damages, right, from these deaths, I don't know. But
if we ignore 2016, there's a classic line amongst Cubs fans. It's always next year, Dan.
I know. It's just like, and like Waymo is like how it would be done.
Almost certainly, I guess.
Advanced sensors, it has LiDAR, it only operates in areas where they have very detailed mapping, right? It doesn't just drive anywhere you want. Waymo has specific areas of operation. And where the roads are more detailed, like have been studied, and they're preload, stuff like that. That's how you envision this would work. But Tesla's not. They just did their own thing. I don't see how it gets allowed, but in my lifetime, I don't see it at all. Anyways, I get sick of talking about Tesla.
Yeah.
Unironically, used margin to buy more stocks when I saw Meet Kevin tweet that I should sell.
What a pro gamer move.
Sir. Let me see. Carl Jefferson. Well played.
Well played.
I saw it and I laughed. I'm like, okay. Okay. Yeah. All of a sudden, yeah, Meet Kevin's going to be the one to tell me when the stock market drops 20, 30%. Yeah. Bullshit. This guy is second in the running for governor. Yeah. He was. The Optimists aren't even going to be 30K. Yeah. And that's the other, like the Optimus robot. People look what happened when inflation went from, what was the peak of inflation? Was it like 8 or 9%?
I want to say so. Yeah.
So we went from like 2-ish% inflation to like 8, let's say. And there were people that were struggling like hard. And we saw it in like all the dollar store stocks got pulverized because that from 2 to 6% inflation was pulverizing up like a lot of Americans where they were struggling to buy basic necessities.
Mm-hmm.
We saw this happen. And you tell me there's going to be a huge demand for $30,000 robots to mix you a drink at your house when people can't make their car payments and their mortgages and they struggle to freaking put food in the fridge. But you're going to buy a $30,000 robot to clean your house and make you drinks. Like, okay. And like, well, okay, industrial use. It's like, there's already industrial robots.
Yep.
I agree. That's a cool use. They already exist. Yep. Toyota has industrial robots. BMW has industrial robots. Industrial robots are a thing already. They're in America. Like this is something that already exists, right? They're not AI. That's where they say Optimus will be AI driven. Like whereas the robots I'm talking about, it's like a computer program basically, because they'll program a robot to like take apart and move it, and go like this, and move it.
Same thing repeated over.
Right. That's what they can do. Like so. If you believe the AI part, what does that add to that? How does AI make a robot better at doing this to that? Does it make it better? Like, I don't see it, but anyways, and most car companies have robotics. Most car companies, like Hyundai has a robotics division, Toyota, Honda, BMW, I think almost every car company has some sort of robotics division as part of it. That does not differentiate Tesla. They all do robotics.
Yeah, like
I think Kamala winning will bring Tesla. So my point too was if a lot is riding on Trump winning, I think, because a lot of Tesla's plans need to have approval by regulators. And Kamala, I seriously doubt you're going to get those approvals. So Tesla, man, if Kamala wins, I could see Tesla dropping pretty hard. If Trump wins, I think you're going to do pretty well, actually. But I don't know. But there's a better way to play the election, though. Just buy Donald Trump stock. If you want to gamble on the election, just go buy his media company,
DJT or something like that.
Yeah. I mean, that's a better gamble. If you want to gamble on the election, because Tesla might not go as far, but like this, like I bought it at like $14. I told you guys in the group chat.
Mhm.
I bought it like 14-ish because when it crashed and there was the audit problems, yeah, their auditors were like a piece of shit. And I'm like, none of this matters. It's not a real company. This is a freaking meme stock. It's a pipe dream company. There's nothing behind it. If he wins the election, this thing's going to be $50 a share, $60 a share. If he loses, man, and he sells out, this could be a penny stock. So there's your bet on the election. So I put a stop loss. So I'm learning. I put with something like this. So I put a stop loss at 25. So if it does tank, like it'll auto sell on me. So I've basically doubled my money already. I'm going to hold it if it doesn't drop below that. But yeah, it almost executed because you remember this.
Oh yeah,
It went from 32 and it crashed. So I almost got executed. Very close. I saw this happen and I'm like, you know what? If it goes to 25, I already got my piece out of it. So I just left it alone and it came back. It's all right. What? I will ride the gravy train. I don't know. I could get out anytime, really. Doesn't matter.
Yeah.
Elon will get, yeah. I think a lot of his plans are cooked into Trump winning. If Kamala wins, he's in trouble. A lot of like none of this robo-taxi shit I think is happening at all. If she comes in, it's definitely not happening.
It's to me, it's just so strange.
Just to be clear, too, the Highway Transportation Board just approves that they could have a vehicle without a steering wheel and pedals. You still need the state regulators to allow these things on the road and to allow automated driving, right? So you can have like municipalities, like individual towns can approve this stuff, like in a demo, like Waymo does that with like San Francisco. But there's a lot of hurdles, a lot of safety hurdles. And this is good for people. This isn't bad. Like these are hurdles to protect you and me. These are safety hurdles. And they're stopping innovation. It's like, no. The government's trying to not have people die like from vehicles. That's their priority. Like that's what they're worried about. So you want to see some? Oh, okay. I see if I can find this before we go.
Oh no.
Yeah. Have you seen this?
I have not. No.
I've talked about this. Like you're not supposed to park these in your garage. I think we've talked about this. So they like it's funny because you get the charger and you think, oh, they'll put the charger in my garage and plug it in when it's in there. And then General Motors literally has in their manual, I saw it. It's like, do not park this in your garage. It was for the Chevy Bolt. So like watch this.
Oh, well.
Look at that shit.
That's
watch this. Look how fast it goes.
I was gonna say that's pretty quick. That does not inspire confidence.
That is lithium freaking smoke. That will kill you if you breathe that in. You're dead. Like you have seconds to get out of a electrical fire like this before you die. They weren't home, thank God. They had evacuated.
Yeah.
Look how fast look at it. It's already spread the whole car. Like 30 seconds.
Yeah. Jeez.
Smoke fire is already at the ceiling. I bet you 5 minutes this house was engulfed in flames completely. I'll bet you. Because that's a hot fire too.
Yeah, I was gonna say that wouldn't surprise me.
It's terrifying. This is terrifying. And you want even more terrifying? Go look at the electric school buses that catch fire. Because they want to bring those to my town. Oh my God. Fucking like, and then there was a Tesla semi that burst into flames. So remember, bigger battery, right? So more things to burn. They had to shut down a highway for a Tesla semi that burst into flames. And I think it melted part of the road. It was so hot.
Jeez.
This stuff is crazy. Like, but nobody cares, right? They're like, oh, it's safe. Okay. Sure it is. Can we get solid state? batteries in phones. See, I don't know if you were a fan of me last year, but I did lots of content on solid state batteries because my thesis is I don't think electric vehicles will become the norm until solid state batteries are functional, like where they actually can be put into cars. Because right now it's just, I think the problem with solid state batteries, from my understanding, is they're too brittle. I think that's the problem, is they can crack. But theoretically, solid state batteries solve all the things that, like, the big problems with lithium gel batteries in cars. Solid state batteries would solve that. Until we get there, I don't believe in these things. I just don't. If we can get there with the battery technology, which I think we will someday, then yeah, it's game over. But I don't know. It might take another 10 years. Stream low-key altering life decisions out here. Never saw this video and was thinking of buying a Tesla. Reconsidering now. Well, yeah, if you buy one, do not park it in your garage. I mean, if they don't say it in their owner's manual, that's crazy. But you do not put these in your car or in your garage. Jesus, I can't talk. And then what was it? UK Warren Buffett. I tried to find. He told me apparently there was a luxury car dealership in England. I looked and looked and I could not find it. He sent me like a picture of it, but I couldn't find the story. So they had the garage attached to the dealership, I guess. Which normally, like around my area, usually they have like the repair shop is separate from the dealership actually. So I guess a Tesla burst into flames and it burned the whole building down. So every car, and they had luxury cars, and like it was millions of dollars or pounds lost. But oh yeah, dude, like lithium batteries just burst into flames, like for all sorts of reasons. Like if you get salt water, like game over. If you get salt water on these things, run away. All those hurricane Teslas, they just park them in field. That's the thing. After hurricanes, when they have the flooding, I've seen it before with other hurricanes. They will take the Teslas. The insurance company will not take them. They'll put them in like a vacant lot and they will just leave them because they're like, nobody will take possession of them if they know that they've been submerged in salt water, because they could just burst into flames like this thing. Like you can't sell it at that point. So you have to scrap it. And then there's also, last year I talked about the insurance problems that I think are going to be a big issue with EV vehicles. So I'm like rehashing shit that we talked about last year, but like I thought that would be a big problem for electric vehicles, is that the insurance costs. We were seeing it last year. The cost to insure these things was rising because they were getting more data, and they were finding out that the cost to own these electric vehicles is high. It's very high. And then the repair and the repair replacement costs of EVs is astronomical. Like you can't repair these things, right? And we said this like last year. If you get in an accident with your Tesla, like how is your insurance company supposed to guarantee that battery didn't get cracked? Like if you got hit and you say, "Oh no, it was just exterior damage, just the fender bent in a little bit," but it's like, pause. Are you 100% sure the battery did not get damaged? Because if the battery get damaged, that happens. There's a fire. Like they burn real fast. So I think a lot of the insurance companies were totaling these things. They didn't really know what to do. But now we're getting more data, and I think they're going to start dropping. I think you're going to see more of what Geico did. Geico dropped the Cybertruck. They're refusing to renew the policies. I think you're going to see more of these insurance companies start rejecting EVs. And I think that's why I think Tesla did self-insurance, because they knew this was coming. And then partially they were able to hide some of the increased costs of insurance because they could artificially lower it, which I was worried. I'm like, if Tesla's undercharging for the risk of the insurance, that's a huge cost that's unrealized. That could be a big problem for them. If they're undercharging to keep the cost down, because that means they're not pricing for the risk that they're taking on by insuring these cars. Then their cover story is, well, we have all the internal data, so we know exactly what to charge you because we know what you're driving. Okay. You're telling me Geico and Progressive aren't aware of how to do that stuff? Like, anyways.
Yeah.
Break down right entrance parking lot. Yeah. Well. Yeah, I'm not there yet.
Yeah.
All right, that's 2 hours. Jesus Christ.
Yes. Yep. Out of curiosity, you got any fun projects planned for the channel in the near future? Or if not, it's
I was
fine. It's
building up
football
to a
season.
Sasha Yanshin video. I
Mhm.
still am.
Oh, very nice. The C viewers got that to look forward to.
Yeah, I know. I don't want to screw it. I really want to cover why I think he's such an asshole. And then also now he has a Meet Kevin style investing course for you.
Oh,
Maybe I should get off my butt and actually work on. I have like all the stuff downloaded
mhm.
to like put together. But I should say, yeah, the three people I don't like on YouTube. It's Meet Kevin, it's Paul, and it's Sasha. Those are my three. Everyone else, I don't really care. Like I don't dislike Jeremy Lefebvre. I never knew him until Chris did videos on him. So, but those are my three that I can't stand. I guess if it was a Mount Rushmore, I'd have to add a fourth. I don't know. At this point.
There's strong contenders for that fourth.
Kamara doesn't bother me that much, actually.
Really?
No, I've never done a video on him, so
Nah.
it's not.
Yeah, that
He
is
doesn't
true.
bother me that much,
Yeah.
like other people. Actually, there's another yield maxer that bothers me more.
Oh, interesting.
I wouldn't put him on the same platform as the others, but
Yeah, thank you, Jian Zhenchen. What about Tanner? Hey guys.
actually, you know what? There you go. There's your fourth. Which they are so excited again.
Yeah.
I'm enjoying it. The SoFi people are so excited right now.
What are we at? Like 10 and change of shares?
They're at
something like
10.
that?
So we're at
Yeah.
like SPAC level. So we're at like initial public offering level. Good for you. You did it. It's back to $10. That's what it was originally like 3 years ago. But it's not even like a competition. Like, okay, let's go look. SCH, if you want to be a growth investor, okay. We'll put it up against the big boy. I don't think they're gonna like what they see. Okay, 1 year
Imagine that.
SCHG. You
Yeah.
still haven't caught back up. 3 years, you're not is nothing.
Yeah.
5 years, you can't even do 5 years.
No, but
So, there's no time frame that SoFi has outperformed SCHG. Like,
and if
the
you're
year to
an
date's hilarious. SCHG just slowly is creeping in a positive direction this whole year to date, and SoFi is like struggling just to get back to 0 from the start of the year. Like, okay, they really now they're all thinking it's like $30-$40 stock because they think that it's either going to get to like fintech valuations or it's going to become as big as JP Morgan. I forget what they think it's going to do. A payday lender. So have fun. So, oh well. Thanks for watching, people.
Yeah. Thank you for having me on.
This is the last time I have premium StreamYard, probably. So yeah, I don't know. I'll either do OBS, Streamlab. I'll just use the free version StreamYard, I guess. I don't know.
Yeah.
But I use clip champs for when I do videos, when I create them, the non-live stream stuff. All right. I think that's it. Any new videos for you? What are you gonna do?
There's 2 that I should be working on with the side project that Andrew and I have on 2 accounts, 1 gap. Maybe I will try and burn them out in the middle of football. That's gonna be so horrible with viewership, but it is what it is. It's fine. Yeah,
Tomorrow's my day. Tomorrow's football. I ain't doing anything else.
It's fine. Yeah, so it's
I got
one
my
of them.
FanDuel account and I'm betting, and I got my survivor pools going. So
Yeah.
I'm in there. I got my 2 TVs, so I got Red Zone and then the local station.
Yeah. So one of them will be just like a revisit of a previous topic that Andrew and I did, and another one would be a modern day update towards that whole Peter Lynch expression of why, like, invest where you have an edge or invest where you have familiarity. And I would like to try and like expand upon it of like, well, what the heck does that mean? Like, what are some questions that you would want to figure out if you're looking at a thing from an investing perspective? And I'm going to use a weird, wacky case. So, yeah, we'll see. It's not for everyone, but
I think most investors, if you just had a core of a low cost diverse index, and then you did a satellite.
Oh yeah.
You did like 20% satellite holdings of stuff based on Peter Lynch's teaching. I think everyone would be just fine.
Yeah.
But no, we got lots of value investors, right? They want to buy cheap stocks, right? Ooh, it's cheap. It's cheap. It's cheap. That's all. Okay, sure. All right. Thanks for watching. I'll just end it.
Thanks for having me on.
Have a good night and enjoy football tomorrow.